Welcome. I greet you, beloveds, in the love and in the light of the one infinite creator. Let's take a look at markets here. We see the markets having closed for December 10th, 2021 in what was a decent update for the market. About let's call it a 0.7% average gain, give or take. As of this moment, let's take a look at where BTC is trading. And of course, by the end of the video, I'm gonna touch on Bitcoin chart there, and we'll take a look at Ethereum, which is trading at 3966. Let's begin with the S&P 500. For the week, S&P 500 was up about 3.8% for the week. The Dow was up the most, up 4%. And for the week, the NASDAQ was up about 3.5%. And for the week, Bitcoin is currently down about 3%. All right. Question. Did you know that the S&P 500 closed at a fresh all-time weekly closing high? It's hard to believe, but that is true. In fact, if we take a look at a closer view from a 1-year weekly chart, we can see definitely this is a new all-time weekly closing high for the S&P 500, which essentially also means it is breaking out above the prior all-time weekly closing high. So believe it or not, this is a fresh breakout for the S&P 500. Now that it has gone above and closed above the prior weekly closing high of 4697.96 from, I believe, the month of October, actually from last month, from November. So a fresh all-time weekly closing high. In other words, this is a fresh breakout, which means we can now be on the lookout for a potential continuation of this move. So, all right, so we get a weekly breakout. Bulls would want to see a continuation above this weekly highs, a continuation of the breakout, while on the other hand, bears would be wanting to see a failed weekly breakout. So let's use that number again, 4697.96. Above this number, and the bulls are still in charge. And if we end up breaking below this number, that's a failed breakout and a reason to suspect that the market could be setting the stage for a pullback. Now, we shouldn't be too surprised, because we know that whenever a market holds, and now, in fact, before I show you why we shouldn't be surprised that the market is at new highs on a weekly basis, is if we take this level here for the S&P 500 weekly, where we had broken out November of 2020. Now, let's take that line and extend it out as such. Now, this is the line we were watching for a potential break or support for the S&P 500, because it has been where the market's been coming back and showing support. And over the last 2 weeks, we came back, tagged it, or the last week actually, and now we are back to new highs. So no surprise, based on this one chart, that the S&P 500, having held this line, was always more than likely to record fresh all-time highs. Now, a true sell signal is going to come at some point, if and when we break below this line. So right now, the bulls are still in charge, and higher prices would just make sense. If we take a look at the Dow, now remember, this RSI 50 uniformity support is nothing new. We understand it very well. Every time we bounce back above the RSI 50 with uniform action, it means we're going to test prior highs and potentially improve on those highs. We did the same thing here. It meant at the time we were going to test prior highs and potentially improve on those highs. And we came here, we've tagged this. It means we are going to test recent highs more than likely and potentially improve on those highs. And this is the Dow weekly. Another way to simplify this is if there's going to be a major market sell-off, then it would have to break the most recent RSI lows line. So you can see again, even on this Dow weekly chart, the bulls are still in control. Now, on the daily, for the Dow, we could see and we can see where there could be a little bit of a resistance. It is this area here, but it's not the strongest resistance, but it is just an area to watch day to day because we are coming back to test where we broke down recently, which is here. And so now the market is going to have to make a decision as to whether it can clear this area or whether it finds resistance. But remember, even on the monthly for the Dow, we see that the market is still strong because as of this moment, this instant, the Dow is staging a fresh monthly breakout. And there is another level to watch for the Dow. That is 3581956. And so, as long as the Dow is above this number, then the bulls are still in control, and we should not be surprised that the market gradually over time improves on its current levels. More importantly is if the Dow, if it reclaims 69.1, then this market picks up momentum to the upside. Remember, even as of this moment, the NASDAQ is still well above the 69.1 threshold. So we can see that the NASDAQ still above 69.1 on the monthly. And so this market continues to be sideways to bullish. Oh, and by the way, not a trivial issue. This is a biggie. S&P 500 also breaking out. And the reason why I say it's not a small detail to pay attention to, it's an important detail, is because not only are we breaking out above the prior recent monthly closing high for the S&P 500, which is at 4605.38, which is the monthly closing high from the month of October. So this is a fresh breakout after 1 month of rest. But more importantly, the S&P 500 did not drop below RSI 69.1. So this is actually a very, 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 very strong breakout. So let's not be too shocked to see this market actually pick up momentum to the upside because of this price breakout and the fact that the RSI is still above 69.1. So this is a very bullish chart right here without knowing what tomorrow is going to look like. But for now, a very strong monthly chart for the S&P 500. And let's say somebody is trying to time a period when the market starts turning bearish, then the following two things would have to take place. We would have to drop below this price, and the RSI would have to drop below 69.1. And so given those two requirements for a bearish look, and it just screams the fact that this is a very, very bullish chart for the S&P 500. And so higher prices and stability would make sense for now. And I thought I could mention the VIX briefly. If I draw a line connecting the prior support lines, something like right there, I'm going to extend this line. It will make sense. And what I'm getting at here is every time we have uniform activity rejection, like here, the general market goes back to new highs. Rejection here by the VIX, general market would go back to new highs. Uniform activity above the line, back below it, it suggests that the general market is going to go back to new highs. This is the weekly for the VIX, 3 years of data. And if you take a look at the daily week, another way of looking at it, every time the VIX is rejected at the 69.1 threshold, the market, general market, goes back to new highs. Rejection at 69.1, general market went back to new highs in May and after May. In September, same thing here. General market, VIX hits 69.1 and is rejected. The general market would go back to new highs. And now here we tried with a cluster of resistances. And it suggests that now 69.1 was rejected. More than likely, this continues to be down to sideways. General market goes back to new highs, is the message. The Canadian market was up about 1.25% for this week, the TSX, and we can see it is doing its best to hold that RSI 50, bouncing slightly above it. That's good as long as that holds. The last time we had a RSI 50 support was here, and of course the market recovered and went to new highs. Now, it could also be that the market does break this line, potentially. So let's say we observe or the market reverses and breaks this RSI low trend line. A break of this trend line would be a fresh sell signal for the general market, or at least as far as the Canadian market is concerned. But for now, given the information that we have, this is RSI 50 uniform activity support, suggesting that a move to test recent all-time highs and potentially improve on it is now back on the table. Remember, we are seeing the S&P 500 and the Dow staging a fresh breakout. We can see the TSX not too far off from breaking out on its monthly chart. Let me give you that number to watch there for potential breakout. Is 21037.07, and the RSI very close, if not at 69.1, but just about there. So a price breakout is needed, and if the RSI can stay above 69.1, this means that we should be potentially moving sideways at worst, and we should be bullish at best. And by the way, I should just mention this, a failed breakout on the monthly, the RSI 69.1, failure to hold above that level, those two things, failed price breakout, RSI not moving above 69.1, would be a reason to be sideways to down. In other words, bulls want to see a breakout above this number so that prices and the market can continue staying bullish. Taking a look at the Nifty, we can see RSI 50 support, which happened last week, and now this week, still holding above that RSI 50, something we've seen in pretty much all the charts we've been looking at so far, which means that by holding above RSI 50, it brings back the possibility of recording, if not testing prior highs, and potentially improving on those highs. On the monthly for the Nifty, now remember, on the monthly for the Nifty, the RSI still continues to hold above 69.1, something it's done pretty much for the entire 2021 period, more so since February of this year. And we can see throughout that phase, we've had a good bullish market as far as the Nifty is concerned. Now it has the opportunity of staging a fresh break above October's monthly closing high. It's not too far off. So that number to watch there for potential breakout is if it can move above 17671.65. So a fresh breakout is needed if this market is to continue moving and recording fresh all-time highs as far as the Nifty is concerned. Oh, by the way, on the daily we can see the RSI is doing its best to hold back above RSI 50. And remember, it's trading between the two main moving averages that most traders watch, the 50-day moving average, the 200-day moving average. So we can say in this area between the 50 and the 200-day moving average, it's more or less a sideways market with a lot of indecision. Now, if I draw a line connecting these lows here, most of these lows and this low, let's draw a line connecting most of those low points. Should look like this. And we see where we broke down below this trend line. And now we are back to test this blue line on the daily. It also happens to be RSI 50. So let's say if the Nifty, as an example, if it can't move above the RSI 50 level, chances are it might have to test recent daily lows here. In other words, this is a short-term challenge on the daily, and absolutely nothing stopping this from being just a little bit of a hindrance, but ultimately it clears it because of the strength of the monthly chart, which is above 69.1. When the monthly is above 69.1, pretty much it can take out any short-term resistance because of the power of that monthly chart. Quick look at the emerging market. Now, this market has been kind of drifting sideways to down over a period of many months, but not yet broken yet. And we can see it's come back again to test this area here. And also we can draw a line connecting RSI lows, this line here, extend it out. And again, it confirms that this is where support could come from and support is coming from. So as long as we are above those two lines, over time, this is good enough for a sideways to up market. Sideways to up market. And should we break below these two lines, one can anticipate a move to 52-week lows and beyond. Right now, the conclusion, in my opinion, is that this is a market that is at very worst stable and has not broken materially. So as long as we are holding above the two lines, this is still sideways. And a break is needed if there's going to be a fresh momentum sell signal to the downside. Just like the Nifty, we can see crude oil by way of USO trading again between the 50 and the 200-day moving average. There's your 50, there's your 200-day, and whenever you're trading between those two moving averages, one pointing down, the other one pointing higher, this is just a sign of a market that is a lot of indecision and sideways. Taking a look at crude oil, and again here this is USO. If we go back to this trend line break, which is this initial break here, and then draw a line from there, which is the uniformity line, a concept by yours truly, and we see we go above it and back below for this reversal area, and now we are back to test that area. If crude oil is to move higher, it needs to clear this area, which also happens to be RSI 50 on the daily, which also means if this is another instance of resistance, then the next meaningful swing trade direction should be to the downside. The weekly for USO also, just like it did in August, where it bounced above RSI 50, is also doing its best. It's gone below 50, back above it with what looks like a V-type formation. I would say that it's as close to uniform action as it gets. And I say as close as it gets because we can actually draw a line in between there. In other words, it's something like this. This is equal in space and time to this area here. So as long as it can continue building on this setup here, then it is on a recovery mode. Now, one thing I noticed also here is we can take the 34-week moving average. We see that it's been bouncing on the 34-week moving average. So we can also conclude that as long as it is above the 34-week moving average, by the way, it did move above that 34-week moving average somewhere around here is when it moved above the 34-week moving average. When it was really on a downtrend, it was well below the 34-week moving average. Hope that makes sense. The 34-week moving average is this green line right here. And it is also where it's been finding support since 2021. Support here, and here we see support again. Now, I was going to say that I also noticed that if I take a line connecting these lows and extend it, so we are connecting the lows here, here, and here. It also does suggest that we shouldn't be too surprised that if this is resistance in the coming week, then chances are we are now going to see a push down. And of course, to correct this is very easy. All you need to do is stay above the blue line so you can continue moving higher. GLD, gold essentially, has been in this range. Something is brewing. Something is brewing. We can get this move higher for a swing trade higher, or we can get a break for lower prices. Keep in mind, as I've been saying over the last couple of months, this is 36 months of data, and moving to fresh 3-year lows is so easy here. Slipping and dropping to 3-year lows would be a fresh momentum sell signal for the downside action. This is gold also. The MACDs are very close to 3-year lows, so gold could slip, or it could use this current sideways behavior here to eventually work on a future breakout. But for now, the risk, in my opinion, remains to the downside, based purely on the proximity to recording fresh 3-year lows on the RSI and MACD. On the weekly, we can conclude that gold has been essentially in this bracket and really sideways, confirmed by the RSI, because we can draw RSI lows line, we can draw RSI top side line if we draw it like that, essentially in a sideways environment. At some point, if you're bullish, you'd want to see it clear this range so it can move higher, which is movement above this RSI range. And of course, if there's going to be a fresh down leg, it would need to see visual evidence by breaking below that box area and breaking below this weekly RSI lows trend line. So for now, in my opinion, it's self-evident that gold continues to be in this sideways directionless trend. Again, based on the monthly, with the risk of potentially moving to fresh 3-year lows and really seeing a big down leg. Let's take a look at the cryptos, and we can see right now BTC trading at 47590, Ethereum trading at 3952. Let's begin with the total crypto market. And for this month so far, we can see that the total crypto market is dropping below 69.1. And as long as that is the case, the momentum continues to be net for the entire crypto landscape. The momentum is downwards, because as you drop below 69.1, momentum tends to be heavily to the downside. Now, because the month is still young, what the bulls want to happen here is the cryptos show some strength and they hold the monthly RSI above 69.1. But for now, based on what we see, the total crypto market as a whole, as a group, is below 69.1 for this month. So chances are we are net based on this one chart. Net. It suggests sideways to down markets for the cryptos. Remember, the last time we had a drop below 69.1 was here in January of 2018. Or February of 2018, and that was the high in 2017, no, in late 2017, early 2018. So the more we stay below 69.1 on the monthly, the more we can say that this most recent run from late 2020 is over, if the total crypto market cannot recapture RSI 69.1. Now, go back to the highs, and we talked about this. This was the break that had taken place. And so let me draw it again. That break right there extended out as such. And just for the sake of education, notice how we tag that eventually also happens to be RSI 69.1. So when you see that at the highs, you suspect that the next meaningful direction is down, and essentially that's what's happened for the total crypto market. But right now, let's fast forward to this current moment, and we can draw a line connecting recent RSI lows line, this line here, as the potential support. So I would say if this can hold, then we start recovering here to the upside. This is the weekly, by the way, for the total crypto market. And if the line cannot hold, if this breaks down, then expect a sharp sell-off for the cryptos. Now, if we take a look at the daily, again, this is the total crypto market as furnished by TradingView, and there's a movement of this RSI coming off the lows of July, and this is the daily chart. So in July, we saw a recovery. So we had a down movement here, and then we saw a recovery here in July. So I suspect what is happening is essentially we are coming to test this area here. Again, this is the daily for the cryptos. The last time we tagged this line based on that uniformity concept, there was a low right there. And now we are back to test that general area. So what I'm saying here is essentially, if we see a bounce based on this support line, if it holds, then that is suggesting that around here we start building to the upside. At the same time, should we crack and break below this line, expect prices to be pressed down. So based on that weekly support line, potentially, and this daily support line, potentially, this could be where the cryptos as a whole, as a group, stabilize and start pointing higher. Now remember, for the month, Ethereum is down 14%, but even and while it is down 14% for the month of December, the RSI still remains above 69.1. So yes, down for the month, but the RSI is still above 69.1. Now, whether you're watching this because you have an interest or just from an educational standpoint, the moment we start and the moment we break below 69.1, expect momentum to really peak to the downside. Now, if we take a look at the daily, to be consistent with what we've seen for the total crypto market, we can see that the daily is also coming back to test this RSI lows line. So if the daily can bounce on this line, this is good enough to stabilize. And if it breaks, then that's going to be good for a bigger drop. Now keep in mind, if you take a look at where prices have been trading, essentially we've been in this range, in a sideways range. And again, we've seen this in many other charts we've discussed in this weekend's market analysis video. That's the 50-day, that's the 200-day, and we are trading smack between those two moving averages, which is just a sign of sideways market. Taking a look at the Bitcoin, one thing I have to say is Bitcoin has a sharply declining 50-day moving average. The last time the 50-day moving average was declining that much was somewhere here. Also, should we observe that Bitcoin breaks the 200-day moving average? Now, break below the 200-day definitely puts pressure to the downside. Now, it hasn't happened yet, but we're very close to the 200-day moving average. So those are some of the things to consider. Something else I should point out here is if we take this line here, which gave us the movement of the lows right here, we tagged it here and here for these lows here. If that was good enough to give us insight into this eventual recovery here, now there was an attempt to hold above this line which failed. And you can see in failing, once we broke down below the blue line here, we have a big drop and we haven't recovered above the blue line. We are also very close to RSI 30.9. So really what I'm saying here is if Bitcoin drops below 30.9, it confirms essentially that it is below the blue line, which should have been support. In other words, net, this is looking like a market that has peaked. This is a major high, and that we could be sideways to down in the weeks and months ahead based on all of these things. Remember, at the highs, it looked like we were going to 70 and above. K, that is. But you knew what I meant. But once this failed breakout took place, it was time to take note that momentum was waning. And of course, we are ways off the high. Similarly, we had the same type of a situation here, where we attempted a breakout. For a couple of days was successful, but ultimately failed. That was a red flag. Of course, on the way down, we broke this area here. And now we can say this general area here is a line to watch, because if we break below that, if we break below the 200-day moving average, all those things, and if the daily in the short term drops below 30.9, all those things paint a picture of an instrument that is sideways to down. And of course, as mentioned, the hope is that Ethereum holding above 69.1 on its monthly. Could save the day. Remember, on the monthly for Bitcoin, it last moved above 30.9 and back below it with uniform action. And again, that is a sign of a market. This 69.1 uniform activity rejection tends to be problematic. And hence, it suggests that these highs could be in place for another 3, 5, 8, 13 years, maybe even more. Who knows? But now I would like to conclude with a bullish point of view. It is the RSI lows line on the weekly. So this line can still offer support. And if this line offers support on the weekly, that's good actually. And it might set the stage. Oh, this is the monthly, by the way. So, oops. This is the month. If this can hold, then eventually maybe we try to break out again. Eventually. So this is a long picture way of looking at things. So we might have to address this in the weeks ahead because this is a monthly chart. It's going to play out over many, many, many weeks. On the weekly, we can also get the same line. This is the weekly for the VIX. Week to week, this line does need to hold. So we can be stable and potentially point higher. If this weekly line fails, boy, then the cryptos are due for a substantial move to the downside. And with that, that concludes this weekend's market analysis video. And I leave you as I found you, in the love and in the light of the one infinite creator. Go forth therefore, rejoicing in the power and in the peace of the one creator. Adonai.